From the floor of the CME Group, Tim Haefke from Top Notch Trading with today's market update on Monday, May 19th. Well, we got a week before the Memorial Day weekend, and it should be kind of an interesting week. You know, I just want to go back to how MrTopStep and I look at the same things and reflect on some ideas, and I see they put it out, and I just want to make sure everybody understands the last 3 weeks. On a Friday, we settled 3 weeks ago at 1874.40. The Friday after that at 1873.40, and then last Friday at 1874.70. That 73.5 to 74.5 area, it's a main focal point that is drawing this S&P to it week after week. So to me, it's kind of a pivotal price that if they can maintain a bit above it, they take off, and lo and behold, what did we see last week? All-time highs in the S&P up at 1898.5, falling ever so short of the magical 19 even handle, and it's a psychological value that this is starting to get to in the S&P, and I'm really believing there's not going to be any kind of real correction until we see this level. And it starts like last Thursday. We make the week low, 59 in the SPOO. We come right back on Friday. It looks like the sky is going to fall, but they stop at a long value price of 61.5. 61.40 actually was the price with a 61.5 low. Test it twice. They build a base from Thursday and Friday, and today we open up at 69.80 to 70.5. Daily pivot is 70.60. We find a low of 69.5, and within the next 30 seconds, we're bid the 060 daily pivot, and it's been off to the races. Look, at last week, they were looking for 79.70 after making these all-time highs on Thursday's move to Friday's move. So I'm looking for a test of this today at 1879.70. That's the first piece of the equation. And if they can sustain a bit above there, it could be the week we finally see 1900. Other than that, it's been a range-bound trade. I come in this morning, there's a paltry 100K, 110K traded by 6:30 this morning. That's nothing to write home about. And by the time we open, they get about 250K from the weekend trade. That's not much volume coming into this. And that's why you see this range-bound idea I talk about, and they're going to stay range-bound as far as I'm concerned. So let's move on to the bonds, because a couple weeks ago, I pointed out that the bonds were looking to cover a gap on a continuation chart. They finally found the bottom of that gap at 137.23, and now they're going to go up as they make highs they haven't seen since last July, or June, July, and make a 138.04 for a weekly high last week before pulling back. So we're into this gap area now with that 138.04 high. The next target is the bottom of the gap at 138.28, and we have to see a key price at 139.08. But in order to find and sign, seal, and deliver our total objective in the bonds, it's really looking for closure at 139.28. So we'll leave it at that. But just one more point of interest in the bonds. Right at December 31st, the December contract printed a 126.24 low, while the continuation chart put out a low of 127.23. Now those objectives I've talked about are from last May to June. So it's almost a year where I have that continuation settle gap in the bonds. So right around the corner, 1 year from there, it'll be very interesting if we can get there. Have a good day, and we'll see you next week.